Welcome back to the Ultimate Trading Podcast for Beginner Traders, your go-to source for actionable insights, practical strategies, and guidance on navigating the markets with confidence. You're listening to the Fundamental Analysis chapter, covering tips 21 through 30, and today we're diving into tip 29, Analyst Reports. If you've ever felt overwhelmed by the sheer volume of financial information out there, or struggled to make sense of market noise, this episode is for you. By the end, you'll understand how to leverage analyst reports to make informed decisions, manage risk, and improve your trading performance. Let's start at the beginning. Analyst reports are one of the most valuable tools available to traders. They are detailed documents crafted by financial analysts, professionals who dedicate their careers to studying companies, sectors, and broader market trends. These reports provide insights and forecasts that can significantly influence your trading decisions. Alexander Elder, a well-known trader and author, puts it perfectly: the most important measure of any security is the sentiment surrounding it, and analyst reports are integral to shaping that sentiment. At their core, analyst reports are designed to answer key questions. How is a company performing? What are its prospects? How does it compare with its peers? Typically, an analyst report includes company analysis, which delves into revenue, earnings, profitability, and cash flow. It also covers market and sector analysis, providing context to individual company performance. You'll often see forecasts and ratings, buy, sell, or hold recommendations, along with valuation metrics that compare stock prices to intrinsic value using models like discounted cash flow or relative multiples. Finally, reports highlight risks and opportunities, helping traders identify potential challenges or growth areas that could impact future performance. So why are analyst reports so important? For one, they support informed decision-making. As Benjamin Graham famously said, investment success is not a matter of buying good assets, but buying assets at good prices. Analyst reports give you the data and context to identify those opportunities. They also influence market sentiment. As finance professor Usbaf Damodaran notes, analysts have the ability to move markets through sheer influence over investor psychology. When multiple analysts issue a buy recommendation on a company, their collective voice can drive investor optimism and affect stock prices almost immediately. And of course, reports aid in risk assessment. Understanding the potential pitfalls of a trade is just as important as recognizing the opportunities. Warren Buffett reminds us, risk comes from not knowing what you're doing. Analyst reports help reduce that uncertainty. The key to benefiting from analyst reports isn't just reading them, it's using them effectively. Start by evaluating the source. Not all analysts or institutions are created equal. Credibility matters. Studies from the Financial Analyst Journal show that institutions with a track record of accuracy generally provide more reliable reports. Next, understand the methodology used. How did the analyst arrive at their conclusions? What assumptions underlie their forecasts? Analyzing the methodology helps you detect biases and limitations. It's also wise to compare multiple reports. Reviewing several perspectives prevents over-reliance on a single opinion and offers a more balanced view. Focus on the key metrics: earnings per share, price-to-earnings ratios, revenue growth, and projected cash flow. These numbers often drive the analyst's recommendations and have the greatest influence on market perception. And remember, stay updated. Analyst opinions change as new data emerges, so reviewing the latest reports keeps your trading decisions aligned with current market realities. Let's illustrate this with a real-world case study. Meet Emma, a novice trader who struggled to navigate the overwhelming flow of market information. Early in her trading journey, Emma often made decisions based on fragmented media reports and headlines, leading to inconsistent results. Realizing she needed a more structured approach, she began incorporating analyst reports into her strategy. Emma started by selecting reputable institutions known for high-quality research. She subscribed to their reports and dedicated time each week to review them. She focused on sectors she understood and found interesting: technology and healthcare, for example. Within those sectors, she identified specific companies to follow closely. She reviewed analysts' forecasts, recommendations, and valuation metrics, then compared reports from multiple sources to build a well-rounded perspective. One example illustrates the power of this approach. Emma identified a leading technology company with strong growth potential. Analysts across multiple firms issued buy ratings, highlighting robust revenue growth, new product launches, and a favorable market environment. They projected the stock could rise 20% over the next year. Using this insight, Emma carefully chose an entry point, purchasing shares at €150 each. She continued monitoring earnings releases, market developments, and updated analyst reports. Over the next 9 months, the stock gradually climbed, reaching €175. Analysts continued to provide a positive outlook but also highlighted potential risks, competition, and market saturation. Using this updated information, Emma sold a portion of her holdings at €175, securing a substantial profit, while retaining a smaller position for potential further gains. This strategy allowed her to achieve consistent returns while managing risk effectively. What can you learn from Emma's approach? First, diversify sources. Don't rely on a single analyst or report. Second, engage in critical thinking. Understand the assumptions behind the recommendations rather than following them blindly. Third, focus on sector-specific insights, which provide context and highlight broader trends. Fourth, maintain a long-term perspective. Even though reports are often geared towards short-term performance, they also support long-term strategies. And finally, stay updated. Market conditions change, and analysts revise forecasts accordingly. Here's a question for you. Think of a time when an analyst report influenced your trading decisions. Did it help or hinder your results? How did you interpret the data? And would you approach it differently today? Share your thoughts in the comments. I'd love to read your experiences and discuss them in future episodes. In summary, analyst reports are far more than just PDFs with numbers and charts. They are tools that, when used properly, can enhance decision-making, provide insight into market sentiment, and help manage risk. Emma's case shows that a disciplined, structured approach to analyst reports can translate directly into improved trading performance. Whether you're a beginner or a seasoned trader, incorporating analyst insights into your broader analysis is a way to gain an edge in the markets. So as we wrap up Tip 29, Analyst Reports. Remember this: use analyst reports as part of a comprehensive strategy. Combine them with your technical analysis, monitor sector trends, assess the assumptions critically, and keep an eye on market sentiment. By doing so, you'll transform these reports from mere information into actionable intelligence that guides your trading decisions. That's it for Tip 29. Stay tuned for Tip 30, Understanding Market Sentiment, a critical skill for timing trades and reading the emotional pulse of the market. Until then, stay disciplined, stay informed, and trade smart.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.